All right. Good evening, traders. How is everybody doing? Let's do a beautiful audio visual check. Oh, what another crazy day in the markets. As always, this market is never boring. Never boring. Sounds good. Looks good. So let's go ahead and get started. Welcome to Slow Markets, everybody. I'm Coach Dakota, Coach DBA. As always, there's our Topstep risk disclosure in the YouTube chat. Everything that we go over tonight is for educational purposes only. That being said, let's just dive into it, should we? I mean, it's Thursday night, Friday, just started Friday trading. And this market, as you guys can see, I have the NASDAQ behind me. And this is the NASDAQ daily. And what a rally that we have been in the past 6 days. It's a beautiful V shape, right? I mean, can you say this is a V shape type market? As you can imagine, there are probably a lot of people that were trying to short this, looking for a pullback, and is not in a very happy situation. Lots of what maybe can we say a short squeeze? I mean, just as fast as we went down, we went right back up. It's a very interesting market, to say the least. Today we went from basically 19,100 and we're sitting here above 19,600. And we're at another interesting place. We are right at this major support and resistance zone. This is where we broke down back at the end of July. We went and tested it, and we had that major rejection. And from there, it was don't look back. We had that massive sell-off. And now immediately right back up. We are right here. This is something that's, to pay attention to. Are we going to see resistance here? At this point, I don't know, right? I was thinking we might see some resistance down in, towards 19,000, maybe in this zone. We didn't get that. We just blew through that. And now here we are, 19,600. And will we get resistance? Your guys' guess is as good as mine. Maybe there's something to be said that we're finally up here. This is a major support and resistance zone here on the NASDAQ. And so I don't know. It's tough to say. I don't want to be a buyer. I'm going to say this. It's the market's just been buy. Close your eyes and buy. Buy the dip, if you will. I mean, there wasn't really great opportunities to buy the dip. But, yeah, as you can imagine, I'm a bull. Everyone knows that. I've been bullish, since down here. But I'm not as bullish. I'm not anymore. I'm not as bullish in this situation because we're up here. Now is where I can start considering looking for reversals, maybe look for opportunities to take some short trades, like maybe some smaller short scalps, see money, take money on the short side. Tomorrow is Friday, so that, take that with a grain of salt as well. We might not see, great price action, but yeah, definitely this is a zone where shorts can definitely become a consideration. Now let's go ahead and zoom in. I'm going to zoom into an hourly chart. Let's go do that. Hourly, boom. And you can kind of see it here. I mean, it's relatively obvious. Take a look at this. Was support, right? And then support became resistance. And, then again, over here back in June, all the way back in June, right? This showed as support. And so this is a major level, 19, it's a zone, right? With everything's a zone. Could we be seeing that right here, right now? Maybe. It's very hard to say because we didn't really get in deep close to these higher 600s. However, just tonight we are showing some resistance, showing some resistance around there. And then on top of that, take a look at this. This is something that I am watching, right? We had this move up. And, if we were to measure this move up, and you guys know exactly what I'm going to be doing, we have another move up, and we can measure these moves however you would like to measure them. And we just take them and look, see how, relatively, I mean, this one's a pretty big one, but we do that and we can compare them onto, where are we, right? We are about an average true move. We still have a little bit, based off of this major one down here. And some of it is news driven. Yeah, you could say that, but that could be something, right? This is an average true move here on the NASDAQ to where we could expect a pullback. I mean, if we're talking about probabilities, I would dare say that there would be a higher probability that there's a pullback up here in this zone after we moved, this type of a move. We did get one here, right? We had that move, and this, for take it as you will, was a pullback, a very fast one, and you have to be quick to try and get in on a pullback like this. So could we see one? Sure. I'm going to be patient myself, my own trading, practice patience, waiting for a pullback, then waiting for like a place to buy it. The number one thing that I'm looking for is an area of support and resistance. And look at this. If I'm going to look to the left, you can see here there was resistance became support. So, maybe we get a pullback down to 19,400. That's kind of a deep pullback. So this is a deeper one where if we do get a pullback that deep, I wouldn't say and expect this in a day, but it's an area of interest that I would be looking to get some longs. And the next one is right around here. There's some support and resistance around 19,500 here again. This one to me seems a little bit more realistic. So that way, if and we're starting to sell off now that I'm mentioning it, but yeah, if we do get a pullback, this could very well be a zone that I'm going to be looking for opportunities to buy. If not, this will be another zone as well. And let's take a look. Let's see about the Topstep daily levels. Let's see how those line up. Topstep daily levels. I'm always curious on that since I'm not seeing anything for this week. We've kind of just blew through everything, blew out of those daily levels. It looks like, this 115 level held up pretty well last night and just rallied off that. There's none up here. We've blown through that. We've seen this huge rally. So nothing in terms of the daily levels there. Yeah, this is a tough area to trade. It really is, to be honest, because I don't want to be long right now because we have that potential to pull back. And it's difficult to short a market like this, as we've seen, right? Where do we short this, especially when we're talking about intraday? If we zoom into a 5-minute chart, yeah, very hard to short a market like this, right? Where do we short? There's very, very few opportunities to short it. I mean, even where do we buy it, right? Where do we buy this market? There's still very few opportunities to buy this. This is just one of those days like we've seen. Not yesterday. Yesterday was a little bit just chop, but the day before that, right? It was the same thing. It was just straight up, not very many opportunities to get in long, very difficult. If you were shorting it, you were just, getting chopped up, unless you were really either getting lucky or just scalping, really in and out of the market. So that being said, I'm just going to sit here, be patient, wait. I'm on fast markets tomorrow morning. We'll see what tomorrow brings. Maybe we get a pullback overnight. I would love to see that. If we get a pullback overnight during the London session and we're down here like in the 500s, and then that will give me some more confidence to be a buyer tomorrow morning. I would rather be a buyer of a pullback than a seller of the rally. And we've been selling off since I've started the slow markets. Whew, okay, let's go ahead and move on to that. And before I move on, I'm just going to do a brief update. If you guys have not joined slow markets before, we're going to be doing this rapid fire. I'm going to jump over to crude oil, then touch base on maybe Nikkei, and go over to our gold. Our gold at 8 p.m. where we're looking for that break of volatility. And then if you have questions, type them in the chat, and we have amazing moderators who will be able to feed me those questions. And I try and get to them after the gold trade. I'll answer some questions, and we'll go through a brief Q&A. And then at the end, we will be doing a trader statistics. So if you want me to review your statistics, there is the link in the YouTube chat. I'm going to go ahead and pin it to the chat. Feel free, as always, go to your statistics, click on share, copy that link, and put it into that channel and put a brief description. It's always easier when there's a brief description and I can be able to answer and help you guys and hopefully answer any questions, right? Maybe you have a question about your own statistics and you would like me to answer it. I love this. I've loved the trader statistics. I've got some amazing feedback and, hopefully it's been able to help a lot of traders as well. So that being said, crude oil, last night, we did get a rollover. So we did get a rollover in crude oil. As you can see, this move, or let me make sure. We did roll over, correct? Correct me if I'm wrong. Let me make sure. That's quite the gap. That didn't just happen. We're at 76.83. Let me see. The channel is pinned to the top of the YouTube chat if you want me to review your statistics. Let's look. Tomorrow, yes, Coach Hoop. Yep. Yeah, crude oil rolled over. But anyway, before the rollover, I want to review this before we rolled over, right? Because we were talking about last night and overnight trades. So last night we were right about here in crude oil, right around 77.45. That link doesn't take me to the channel. Let me make sure I get the correct link. If not, you guys know where my channel is. It's in the Topstep Discord. Over on the left-hand side, it says my name, which is Coach Dakota. So let me get the correct one. I'll just confirm it to be safe. So just copy. Oh, okay. Andrew, you were there before I was. There it is. Let's go pin that to the YouTube chat. There we go. There it is. And now let's get back to the market. So here is crude oil. And last night I was looking to get in long on the break below, below this. We never did get a break. We just rallied up. So that's the great thing and beauty about slow markets, right? So if you stay tuned, closer to the middle of class, we placed an order. I said you could follow along in a practice account and just learning how to, place trades and get used to trading overnight. And we'll do the same thing tonight. But we did roll over. That being said, whenever we roll over, the price action could change. It could get a little bit choppy. It's not as normal of a market to trade because we just rolled over. And so I'm going to go ahead and pass. I'm going to just take a pass on crude oil, and I'm not going to talk about crude oil tonight. And in exchange, we're going to talk about Nikkei. Take a look at Nikkei. Nikkei is in an interesting place. It really is. It's very similar to the NASDAQ. If you guys remember, we've had these beautiful technical patterns, and this is the power of technical analysis. And I'm going to stress this all the time of why, and this is a beautiful reason why I love technical analysis so much. We had this beautiful wedge forming. We broke out. This was resistance. It became support. You could see very clear and obvious. It bounced off this support, 2 times. We rallied up. We broke out. We pulled back a little bit. Exactly. This was resistance. Resistance became support. And guess what? We have hit some of these targets. This is a key resistance area. So we went up there, and now it looks like the Nikkei is starting to sell off as well. But yeah, we came up here into this resistance zone. Looks like we consolidated for a little bit, and we're starting to sell off. So maybe we could sell off to 37,400 as I start to zoom in here on the Nikkei. This is the Japanese market. Remember, looks like there's some support right there at these wicks, right around 37,400, and we're starting to sell off a little bit. Since I've started, that could be something to it. Yeah, very much like NASDAQ, very well we could see a pullback here. I mean, these have been some big moves in the Nikkei where that's 3% up, right? 3.25. So I wouldn't be surprised if we get a bit more of a pullback, maybe to that 37,400 level. But as of right now, I'm just going to not touch the Nikkei, not touch crude oil. Let's take a look at ES. I have a love-hate relationship with ES, but very similar to the NASDAQ. I mean, copy-paste what I just said about the NASDAQ and maybe even the Nikkei, right, where we've had another rally. This is identical to the NASDAQ. So same exact analysis that I just did on the NASDAQ as I did on basically the Nikkei. Is we're at an interesting area where we very well can see a pullback in the market. Now remember, anything can happen. So, we might not even see a pullback or a deep one, and it depends on what you would consider what is a pullback, right? A pullback might be 50 points. It might be 100 points. You just do not know. And take a look at this. Like this was the pullback here on the Nikkei, or the ES. So, you know what? Would it be a fair assumption, right? Look at this. Look at this right there. That is something to say. Like, is that all we're going to be getting on these pullbacks? Is something like that? If that's to be said, maybe we could just say, hey, if we do get a pullback, maybe we get a pullback down to 55.50, the mid 55.40s. That is reasonable. Let's see what that comes to on the NASDAQ as well. So here's the NASDAQ. What's the average pullback on the NASDAQ? Let's just say, if we were going to just take that, let's just see. Because, yeah, these are relatively the same when it comes to just measuring what these movements are. So it wouldn't be too far out to see this one saying about 19, just below. It's a zone. So I know it's really small. Let me zoom in for everybody. 460s, 470s. It's very hard to say. Not too much of a move when we do get these pullback on NASDAQ. So maybe we just be patient. At least I'm going to be patient, waiting for pullbacks at areas of support and then looking for opportunities to buy it. I don't want to be selling this market. Definitely not going to be selling this market unless something dramatically changed, right? Because if I go back to the daily, I'm sure the NASDAQ or the ES is the same. Like, we're testing this resistance. We very well could have maybe even a deeper pullback down to, this is a bit of a stretch, but it could happen, right? Maybe we have a pullback down back to this level of the 19,000s. That's more on the extreme note, but it could very well be possible, right? Okay, that being said, we have 10 minutes to go. Let's go ahead and take a look at gold. We have the gold trade that I like to look at every night at 8 p.m. Central because we see a spike in volatility. Gold's a little interesting on the daily. As you guys could see, it's pretty dang obvious that we are bullish gold. We are trending up. The trend is, maybe getting a bit steeper, and we're going higher and higher. So there's something to be said. We're making higher lows, making higher or equal highs, and this is a daily chart on gold. And maybe we even see something like this, right, where this could be a flagging pattern, right, where maybe we're just trying to consolidate and then we either have a breakdown or even a momentum burst to the upside. I have been looking at 2,600 on gold to see if we could get that nice momentum break. So far we have not had that yet, but we've been hovering around this key psychologic 2,500 level in gold. It'd be interesting to see if we retake that and could hold above it. 2,500 is being quite the price. As you can see, there's the 2,500 level, and if we continue to zoom in, here it is, 2,500. Like, that was acting as resistance. We broke above it. It came support. We broke through that, went up, tested it. And very much same exact thing, right? Like, look, this is very similar. So maybe this is like a breadcrumb where we could use this as reference, where we broke above 2,500. We held it for a little bit. It was becoming support. We did break down below this. And then we tried it again. It became resistance, completely sold off. And now we are getting up there again. So Man, 2,500. I mean, that's a key zone, right? It's a key level. It's a psychological level. And essentially, we are wanting to look at that as either becoming support or resistance, this key 2,500. So maybe we could look for shorts if we get to 2,500. And then if we do break above it, we can look for longs, or vice versa. If we break above it, and maybe we could do the same thing, right? If we break out, then maybe we look for a retest of 2,500 and then a continuation back up to these 2,515s. That could be a possibility, either looking for a breakout and a retest or just looking for us to reject 2,500 like we did at the beginning of August, these 3 times. So let's zoom in. We do have about 8 more minutes until the 8 p.m. Central, and man, that was quite the move. Was that? Yeah, that was the news event. That came out right at the news event, and we just immediately sold off. Looks like we double bottom, and we're right back up here testing 2,500 in gold. 2,500. That is the level to behold. All right, let's get some questions in while I'm waiting for the gold trade. We have 8 minutes. And now remember, I'm going to try and place a trade, and we'll journal through it. It is not a signals class. I'm basically only placing a trade so that we could journal through it and we could get through some questions for education, right? So while I'm doing that, if you do have questions, I see there's a few questions coming through, is how do you share your statistics? So if you go into your statistics, your performance stats here on Topstep X, and then you click on share, copy the link, and then you just paste that link to the Discord channel that is pinned to the top of the YouTube. It's my Discord channel inside of Topsteps. It's Topstep's Discord, and then I have my own channel where I talk to everybody and you can ask me questions. What a day, guys. And you know what? It is Friday, right? It's technically Friday. There's that fun saying, F it Friday, fade me Friday type feeling. We'll see. You don't have to trade. Remember, trading is optional. You don't have to trade. If you guys didn't catch Wednesday's session with from the psychological and mental aspect, if you missed that, feel free, watch the recording. It was Wednesday, which was yesterday at 11 a.m. And if you missed that, we do have another one coming up on August 20th. We do have Brett Steenbarger. It depends on, do I have a preference? I think they're both the same. Both, and everybody has their own perspective, right? You can't, at least I don't, say that one person is a lot better than the other. The goal is still the same. We're working on your mental health. If you missed the last one, we have August 20th with Brett. I'm excited. I'm excited for that one. I did watch it. On Wednesday, and it was great. I'm going to be watching this one as well. And it's definitely worth rewatching that recording. Okay, let's zoom into the 5 minutes. 5-minute chart. 5-minute chart. One thing to be said is, like, we make this pivot high. We went up and we almost touched 2,500, and now we're kind of rejecting here. So, if we do have a rejection, maybe this could become a shoulder, head, and shoulder pattern, where all that is this is a good looking one where, we made a higher high, right? We made an equal low, maybe a little bit of a higher low. And so now the question is, do we go up and make a higher high, or is this the lower high, right? See, lower high, could that be a possibility? And we come back down and come to test the lower 92s, the lower 90s. That's the first thing I'm looking at. I do see that this is going to be an interesting point of reference if we're going to be playing for a breakout trade where, maybe we stay inside this, consolidate, and then we look for a break above or a break below. That is something else I'm looking at as well. Will we wait for a neckline? For tonight, no, because like I said, I'm doing it for education, but very well you could consider and wait If you're wanting to get in short and we're talking about probabilities, right? It's like, I want a more probable trade. Well, it's more probable if you do wait for a more clear defined break. So I would say that for this example, if the market does start to sell off and we do break below like this zone, then the odds of us continuing down are greatly increased. However, for me and my personal and the way that I like to trade is I like a better risk reward, right? I would like to get in a little bit earlier if I'm looking to short this market. That's, for example, if I'm going to get in up here, I can have a tighter stop loss. I can have a greater risk reward. However, the probability is a lot less likely. I hope that made sense. Hope that made sense to everybody. All right, 3 minutes. 3 minutes. I'm going to go ahead and zoom in one more time. Let's go ahead and zoom in. And now we can start to see. And now remember, this is for education. Please do not copy. Please. So the first thing I'm noticing is there is a lot of resistance here, right around 96.4, 96.5. So 96.4, 96.5, there is some resistance. So maybe that could be an area where we could look to take in a long for a breakout to the long side. The next one would maybe be, I do like this zone down here to the bottom to see maybe a possible short. If we do break below this for a short, I mean, there's so many different ways you could trade, right? So if we go down, we could get in short on a break below that, or possibly a reversal to the long side and get in long on a reversal down here. Or we could, I mean, there's that break. I mean, we still have 2 minutes until 8 p.m. So we maybe see a spike in volatility. Yesterday was not great at all. I mean, we've seen some volatility. Definitely not a great market. And every night is different. It really is. Every single night here in slow markets is different. Very rarely do you see gold react exactly the same. It might act a little bit similar, but it's not the same. Don't copy. That's why most of us are here. Yeah, you guys are here for the education, not to copy. We're going to be reviewing statistics. I know I reviewed one trader and he had a gold trade. I mean, it's a valid trade for me and the way that I'm doing this. And guys, this truly is the way that I like to build a strategy. It's been almost 3 months now. Probably has been 3 months since I've done this. Been reviewing this trading gold every single night for 3 months, day in, day out. It's very repetitive, right? It's the same thing. At least the actions that I am doing are exactly the same. The market's not the same, but the actions and the way I trade the market are the same. The way I get in, the way I, think through the trade, the way that I put my stop loss, my take profit, and everything should be very, very consistent. Here we go. One more minute. Let's watch. Let's see what happens. Not a lot of movement so far. We're staying in a very tight range in this little box. So you know what? I very realistically, we could put a sell stop. Oh, let's go ahead and see if we could get into it. You see that volatility, that spike in volatility. We're still inside that. Oh, gonna put a sell stop and it got triggered me in. So I'm in short. I'm gonna go ahead and put my stop loss right there at 95. Oh, I always forget to do this. Move this 2 ticks. Okay, let's see what gold does. Got in short, and the reason why I got triggered in is because we just broke down. Now, whether this is a whipsaw is another thing. Risking, it didn't do ticks. Why didn't it do ticks? Ticks, save. There you go. Risking 18 ticks on this particular trade. Very realistically, I could get into another one if we break down this. If we break down below this pivot at 94.4. And let's go ahead and walk through this. Markets move really fast. The first area that we could possibly take profit is 92s, maybe at the bottom of this neckline that we were looking at. How we were saying this could be a shoulder, head, shoulders. If we do break down, maybe 92, these upper 91s could be an area for one take profit for this example. The next one would be, I would say, 88s. Looks like there is a nice little zone for support and resistance right here at 88. That could come into play if and only if we do sell off, right? Of course, they're not going to come into play if we just rally up. So far, so good. Risking 18 ticks to make 34 on this example. So that is a good, almost a 2-to-1 risk reward on that one. But then if we're looking for a take profit all the way down here, it's risking 18 ticks to make 70 ticks. So that is a good, what is that, a 4-to-1, right around a 4-to-1 risk reward. Someone says, why the sell? Why did I get in short? And it was a breakout trade, right? We were consolidating right here. And as soon as we started to break down, I got into a short. That's why. Very simple, very straightforward. And then I'll get triggered into a second one if we do break down below 94.4. I do like this is the original stop loss. I'm going to go ahead and start. I'm going to put a journal entry here, and we're going to put the aggressive trailing stop loss. And that is going to be minus, I think it's going to be minus 20. Let's go ahead and do that. Let's see, I want to make sure, minus 18 ticks on that stop loss. So I'm going to go ahead and do aggressive trailing stop loss, minus 18 ticks. So still risking about 18 ticks, if I could put it on there. And now let's watch. I'm going to go ahead and do another one. Let's do a line. I would believe this would be a reasonable take profit as well. We'll go first, take profit. This one, what was it? 32 ticks. I'll go through and I'll edit that once I confirm. 28 ticks on that one. So just journaling as we go through here. All right. So let's watch this, be able to make these decisions. So first take profit, the second take profit is going to be around 88. If we do get down there, we shall see. But so far, not really seeing much follow through on here. As we was talking about the being, everyone who had a stop loss around 24.5, that was long. That was a nice little, could that be considered a liquidity grab where it just barely ticked us in, barely got in, and now we're starting to get back up into these 94s. But we'll watch. Usually so far, the aggressive trailing stop has been the most valid. The normal trailing stop, minus 24 ticks versus 18 ticks. So I have been and I've been liking an aggressive trailing stop for the most part. And then, yeah, let's go ahead and let's do a time stop. I'm going to do a time stop at 20 minutes. So I'm going to go ahead and put a time stop, and we could do that for an example as well. So let's go ahead and put a vertical line in at 20 minutes saying, if we do not go anywhere, we're going to close out of this position right at 8:20 p.m. Looks like we did make a nice little pivot. We found some sellers coming in right around 95. This is going to be a valid. I think that's going to be a good place for a trailing stop if we do break down. 95.6, maybe 95.7 would be a decent place for a trailing stop so far. It's looking relatively good. Still, yeah, we're still pushing down. Not too crazy. Not a lot of volatility yet into the market. Not a lot. Well, we watch it. Not really much to go over. I think if we stay around here, I'm going to move this aggressive trailing stop at 25.7 sooner rather than later. And it'll be risking about 6 ticks. About 6 ticks on that. Because that risking 6 ticks would be much better than 18 and also much better than, what was it, 24? It's just a tight stop loss, aggressive trailing stop. These are different examples, right? And then as we go through this, and as a trader, and as us as traders, as we're learning how to trade, learning how to be consistent and wondering, the way I trade, my style of trading, this type of market, how do I trade the best, right? And so far the aggressive trailing stop based off of the way that I have been trading gold at 8 p.m. Central has been the most optimal strategy and has been more profitable the past couple weeks, is because it's been aggressive. We're managing risk. We're not letting it having that wide stop loss in comparison. How do I add back the price bar on the chart? I'm not sure what you mean. Is it a specific amount of ticks or is it subjective? So the way that I have my stop losses, if you guys haven't watched, I like to see these areas of support and resistance. Like you probably hear me call them pivots, where there is some support and resistance in here. So therefore, I can move my stop loss based off of that. It's not set. I personally do not like having set stop losses. Like, I'm going to enter into this trade and my stop loss is going to be X amount of ticks no matter what. I do not like that because the market conditions are always going to be different every day. And, if I had an exact 20 ticks stop loss, it would mean my stop loss would be, say, right here. Well, I'm perfectly fine risking an extra 4 ticks because this was an area of resistance, and it very well could be an area of resistance again. So that is why I don't like to have, and it's 100% my own preference. Everyone could have their own preferences. I'm not saying it's right or wrong, but to me, I need to have a valid reason to have my stop loss at a specific area. On the right, let's see. On the left, stop. Let's go. It's only showing me middle bottom. Yeah, I know it's a little bit there. Oh well, we'll get used to it. Like I said. And then once we're done, we're going to have some nice art and be able to walk through this trade. And actually, you know what? I'm going to go ahead and do that. So triggered in. I'm going to do the text separately because I want to. Yeah, I like doing the text separately. That is just better for me. Okay, and I'm going to go ahead and move my trailing stop. I am now going to be risking, let's just say, 6 ticks. My normal stop loss is going to be fine at 17. I'm going to do the aggressive trailing stop. Now risking 6 ticks on this trade. So first entry, I'm going to go ahead and put, this was the second entry. That was a horrible second entry. Obviously, with hindsight. And we still have the time stop in there, so the time stop is still valid. We have 10 more minutes until the time stop would come into play. Hopefully we break out. Yeah, gold's been slow. Gold was also slow last night too. It's the summer. Maybe that's coming into effect. The last couple weeks has been a lot more volatile, and now we're kind of going back into the summer slowness. All right, we're coming back, testing the lows, testing 94.3. Now we finally got a break. So I like that. You know what? This is a decent stop loss, so I'm perfectly fine if we continue to break down and show more momentum, moving the normal stop loss. I'm going to go ahead and actually, while we do that, I'm going to type in for a normal stop loss here. I'm going to just do that. Well, let's just say normal stop loss. It is at 18 ticks. Going through and just journaling everything. Bam. Okay. Let's watch this. So far, the aggressive stop loss has been more profitable. We do have 9 more minutes until this time stop, and I put this time stop there visually so we could see it. We're still holding below 94.5. Let's see if we could have that continuation. If we break, maybe we get a lot more momentum. I love to see the momentum. Sometimes gold, if you guys have traded gold before, right at 8 p.m., there can be a big breakout. As of late, there has not been, which has really sucked lately. But, that's what we're here for, right? We must be trading a market in different market conditions. We can't always just say, the market's going to be this type of way for as long as we possibly could imagine. And that's why trading a strategy, the longer you trade your strategy, the better idea you get and the more confidence you get about your strategy on how it's going to perform in different market environments. And I think we're starting to see that here. We're not getting great breakouts in gold from yesterday and tonight as well. So, we get to see how this strategy performs in this type of a market condition. But so far, nice and slow. Slow markets. The Goldman interns watching your stream, maybe they just came in and say, we're going to just come in and suck up the volatility at this time. Or they're front running or something. Not much has been happening. It's been very slow. Like, this is true slow markets. We're not getting any good break that we normally see. And trading has been very lackluster the past 2 days in gold. So stopped out -6 ticks on the aggressive trailing stop. But normal trailing stop is still valid. We'll see. Here's the funny thing is, right before I came up, I did mention that maybe a reversal around here could be an option. So the reversal, if you were looking to the long side, actually looks really good. A reversal to a play of to push up to 2,500 might be the better trade. Was looking for a push back down here to some support and just buy it. So yeah, that so far it looks like long could have been a much better play rather than a breakout. Instead of a breakout, maybe a reversal trade. And we're right there at 15 minutes. Maybe just having a tighter time stop could also be a lot better as well. And while we do that, let's take a look at NASDAQ. Is NASDAQ still selling off a little bit? No, we had that big sell-off, but other than that, not really much. Just last week, now remember guys, and I want to bring this up while we're waiting for that gold trade. Look at this. Not too long ago, just last week, August 5th, we were down to 17,300s. 17,300s. So over 2,000 points in a little over a week. So from here to there, this is on the NASDAQ. 13%, 2,200 points. Like, yeah, I know it's easy to say this with hindsight, but it really did feel like, in a week or in a few weeks from now, it's going to be easy to look back on a move like this in the NASDAQ and in these markets and say, man, what a great opportunity to buy the dip. 2,200 plus points in a little over like 10 days, right? 10 days. That is just insane. It really is. Like, this volatility and us being able to come here every night, talking about it, and just now with the power and the beautiful power of hindsight to just say what a beautiful opportunity it was to buy the dip. Yeah, it could be life-changing for a lot of people as well. Yeah, very, very life-changing for a lot of people. Yeah, true slow markets. Let's go take a look back at gold. And I'm going to go zoom back in gold as well. Come on. So aggressive stop loss did not work out, but however, I believe that normal stop loss is now valid to move it down below that previous pivots. Let's go ahead and do that and do 12 ticks. We're risking 12 ticks. So aggressive stop loss done, and it's gone. Let me go ahead and change this. We took a loss on the aggressive stop loss. Oh man, that's just ugly. That is so ugly. I'm gonna just go like this. I'm gonna add the text manually. That's just a lot better for me. Aggressive stop loss, stopped out. Normal stop loss, now we're risking about 12 ticks right there. And we'll see. Just let this, I'm going to let this thing play out. So far, the normal stop loss tonight is just outperforming. And now if we do get a breakdown, and we still have the time stop in, we have 3 minutes. 3 minutes for that time stop. And then we could take this nice journal entry. And let this line up, do some of the artistic stuff. And the normal stop loss tonight is outperforming, giving it a lot better. Now we're starting to see more aggressive selling coming in. And now we'll just see how the normal stop loss plays out. So the normal stop loss means it's just how I normally trade, and it's leaving it a little bit more room, right? So it started out up here, then on this one, and then on this one. You can see these pivots being very clear on this 1 minute chart. So that's what I'm saying as a normal stop loss. And then aggressive stop loss is moving it a lot more, moving the stop loss quicker, because immediately we've seen a little bit of resistance here, so we moved it a little bit quicker. And to each their own. You can have your own ways of moving stop losses, whether you want to move them very aggressively or not aggressively. It really is up to the individual. But tonight and on this gold trade each and every night, I'm doing both of these examples so that way we can see which one can outperform, because you can't do both, right? You either have to choose one or the other when you're trading, and it's always nice to see which ones are performing better. And yeah, that's it. All right, we have 1 more minute, and then the time stop comes into play. The time stop will look at that right there. That was a fake out if I have seen one. We're gonna try and make that. So the time stop in 1 minute. Sorry if it's a little bit messy. It is messy. Let me get this cleaned up a little bit. Well, time stop might have been a minute too long. So right there, minus 2 ticks. So I'm going to go ahead and put this time stop was minus 2 ticks right at the open of this candle, 95.2. So I'm just going to go ahead and do this. I'm going to say time stop minus 2 ticks. So time stop 8:20 p.m. Central Time minus 2 ticks. And I'm going to put that right there. Time stop 8:20 p.m. Central minus 2 ticks, and you can see it was right there at 95. You could maybe say, you know what, I'm going to take to consideration the bid and ask, and I'm going to say minus 3 ticks. And So the time stop, minus 3 ticks. Normal stop loss, looks like we very well could get stopped out, minus 12 ticks. And we'll see. We'll go from there. I mean, that sucked for everybody who was short. Who knows? Maybe we're not stopped out yet. Not stopped out yet. Yeah, that's sometimes the market's like this, guys. It really is. It can be very, very difficult to trade. You know, for both people who are short, people who are long, where it comes down and it runs stops, it hits take profits, and then it turns around and rips right back up and it runs stop losses in the other direction. And it's just a really ugly and hard market to trade. And so, like I said, sometimes the best thing to do is to not trade. It is the summer. And there's the stop out. I'm going to go ahead and do this. Normal stop loss, aggressive stop loss. And I think that is going to be it. I'm going to get rid of that. And here's the thing where we could go ahead and I want that to look a little bit better. We're going to take a screenshot and add this to our journal. So go ahead and screenshot this. Oh, I'm going to make it look a little bit better. So download. We're going to pull up the journal entry, orders, trades, and tonight. I think we go here. We want to add this to the day. Minus $200. I think that was it. Let me make sure. Add journal. I love this feature. I really do. So easy. And there you go. There is the trade for tonight. So another great example. And I'm not going to be able to say how much I really like this journal to where I don't have to type out a book to explain a single trade. It's just right there. It's so quick. It's so easy. And yeah, I could just look at this and I can say, okay, I entered there. Here's my aggressive stop loss, minus 6 ticks, my normal stop loss. Here's my time stop. How did this perform tonight? And I said, okay, which one would have been better? Well, obviously on this, a 3-tick or the time stop, an 8:20 p.m. time stop worked out beautifully, right? Or maybe even if you would have put 15-minute time stop, 30-minute time stop. And like I said, there's so many different ways you can trade on this. And the whole idea, now I get this, and I know traders are saying this all the time, right? Where this really is for education. I'm not placing these trades to say I'm planning to win this. The goal is to be consistent, journal this, do different hypotheticals. How can I manage this trade better? And then we'll collect all these like screenshots and all these different trades. I like this because I don't have to write down every single trade. I don't have to write a book when I am trading. A picture to me is worth 1,000 words. I could see what I did. Maybe even I could add a split screen. So in terms of this is something I've also liked and considered, right? Where I can do something like adding a second chart. Oh, that's really zoomed in. Let me zoom out. Right? So you could add another time frame. Like say over here on the left-hand side, you could do another time frame where it's like one where you could have an hourly chart. You could write it down on the hourly chart. You could mark up your charts however you want it. You could take a screenshot, add it to your journal entry, and then over a period of time, I want to do this for another couple months or another 3 months or another month, and then you could review this, and it makes your reviewing your statistics so much easier that you're able to take these screenshots and go through and review this and see this was what was this? This was on the 13th, and I have this beautiful screenshot, and this was one of the better ones where it hit both my take profits, and you could see how the trade and the different ones performed on the 13th. And then here's another one, right? And you could go back and go through this, and it makes, for newer traders or even traders who've been here for a while, it makes reviewing your statistics and reviewing, this type of a strategy so much easier, in my opinion. So anyway, that being said, let's go ahead and take a look at the markets. Let's do a market update and see what's going on. It looks like NASDAQ is starting to, rebound from that sell-off. Sure enough, it showed itself again tonight. You can see how we've had this, what was that? A nice sell-off during power hour, and we started to rally and push up. We're doing that again tonight. Was this the pullback from 640 all the way down to 570? That is what is that? That's a 63 point pullback. Was that the pullback here for NASDAQ? I don't know. I wouldn't. You know what? To be honest, the way the markets are, nothing will surprise me. Nothing would surprise me. Where we did start to break this downtrend and we're pushing up. So if that was the bottom of the night, I would not be surprised if I wake up in the morning and we are up into the 700s and say that was the low of the session. I also wouldn't be surprised. We got that 60 point pullback. Who knows? Maybe tomorrow we'll be at 20,000 here on the NASDAQ. Yeah. But now let's talk about a slow markets concept, and let's talk about a trade that we could have. So I'm going to jump over to a micro, MNQ. So this is a micro. And let's talk about a trade. So on this micro, I like to trade overnight trades in terms of I like to place an order and let the market run throughout the London session and run throughout the evening. So what I would love to see happen tonight, and what could be a very decent trade setup, is if we can rally up between now and tomorrow, whether that's during the London session or whether it's right before the New York session, I could see that this becoming resistance again. So it would be very realistic that if we rally up to, say, 677, I would be okay with putting a sell limit. Now, these are micros. So let's do a sell limit of 1. This is for example, and this is and this is how I trade. Now remember, this is not a signal. This is just how I love to trade my slow markets. So what this is saying, I would like the NASDAQ to rally up and hit 677 and then trigger me in, and then I would look for it to sell off. Now, will this happen? I don't know. But if it does get up into this area, I would like to get in short. So how much would I be willing to risk? And so if I am going to be getting in short at 674, but I would like to have my stop loss somewhere above all of this resistance. Now remember, this is an hourly chart, so we're typically looking on a higher time frame. I would like to be somewhere above this, and to be honest, just based off of this, I think 724 is going to be realistic for a stop loss. So let's just say 724. I'm going to make sure that that's going to be accurate. I want good even numbers. So 724 just for even math. So if I get in short here and I am having my stop loss at 724, and this is a trade that I'm going to turn my computer off, I'm going to go to bed, and I'm going to let this trade run overnight. Maybe I don't even get triggered in. I would be risking about 50 ticks or 50 points. So I'm risking 50 points on this trade. Yes. So 50 points on one micro. Do the math. It's $50. Wait, it's $100, correct? Let me make sure. Okay, yeah, it's 50. It's $2 per point. Gosh dang it. Yeah, it's $100. It's $100. Come on, it's late at night. So anyway, I am risking $100 on this trade. So that being said, I'm actually fine. I like to have my risk reward right around $300. So based off of this, I could do 3 micros. So I'm going to go ahead and do that. Instead of 1 micro, I'm going to go ahead and do 3 micros. So now I can trade 3 micros. I would risk $300 trading 3 micros. And then for a take profit, I do like these lower 500s. I realistically, and I would be okay with seeing maybe these lower 500s. That seems like a little bit of a stretch. That would be 150 points. So let's go ahead and do that. I'm going to do this for example. Now remember, this is not a signals class. This is purely an example. This is how I trade. I do like this. I'm going to go ahead and make it an even number just for the sake of easy math. This is just purely for easy math. I'm going to go ahead and do 514 for a take profit. So 514. Just pretend that's 514 even. So I would be looking to make how many points? I'm not doing the math off my head, okay? So about 160 points. So risking 50 to make 160, right? So doing that math, let's do 160 times, what is it, $2? I'd be making $320 per trade, times that by 3, $960. So I'm going to be risking 300 to make 960. So let's go ahead and I'm going to set that up. Risking 300 to make 960. Go ahead and save that. Go ahead and go back to trading. Going to look to short 3 micros at 674. So let me go ahead and place that again. 3 micros at 674. Sell limit. I'm going to readjust that price once I zoom in a little bit so I can be a little bit more accurate. So that is the trade, and let's go over this because this is an important part, and this is what gets a lot of traders a little bit confused, okay? So what this means is the market, where it's at now, we could go down, we could go up, whatever. I don't really care. I'm going to turn my computer off, and I'm going to go to bed. And I will only get triggered in if the market goes up and touches 674. If it does, I will only get triggered in then. If it goes down, if it goes sideways, I will not get into a trade. I'll wake up and nothing happens. However, if I do get triggered in, there's only 3 things that can happen, right? It will either go up and hit my stop loss. I lost $300. Big deal. It will go down and hit my take profit. Great. I made 960. It was a great risk reward. Or it's somewhere in between. And when I wake up, I can manage it and I can make my decision then. So that is going to be my slow markets trading concept for tonight. Remember, it's not a signal. It's an example. So please do not just take it as a serious trade. If you would like, maybe you could follow along in a demo account, in a practice account, and you could practice, setting these trades up, getting used to putting orders in, and getting used to it if you want to, right? That being said, it's now 8:34 Central. I'm going to leave this on to, maybe I could talk about it tomorrow during fast markets. If not, I'll talk about it Sunday night. I'll talk about this trade. The way that I put the stop loss is in settings, the position, risk, profit brackets. So as soon as I get triggered in, the max I would lose is 300. The profit I will make is 960. This trade could happen at any time. It could happen during the London session. It could happen in an hour from now. Who knows, right? The point is that I have an order out there. It's a working order. When I sleep, I will have the stop loss and the take profit. This would be an OCO. As soon as I get triggered in, then the system here, this would be the risk, and here is the profit. Let's see it. Like I said, I'm also getting used to Topstep X. I'm continuing to get comfortable with my tools, and I'm getting comfortable in a demo account. That's what this is, my coach's demo account that I could play around with, and I could talk and, on stream in the middle of class. And, I make mistakes as well. You guys see me make plenty of mistakes. It happens more often than I'd like to admit on making these mistakes. So now, that being said, let's go ahead and move on to some trader statistics. Let's go through here and let's take a look at some trader statistics. So remember, You guys submitted these trader statistics to me. Let's see this. I'm going through. Let's see if we could pull up some trader statistics. Okay, here's one. Let's see. Express funded account. Ooh, I love the express funded accounts and the accounts that are funded. That's not that. That's not it. Where did it go? Is this it? There it is. Okay. Express funded account. Let's go ahead and do the backdate. Make sure. Let's review this. Let's go here. Give me 1 second. Getting everything organized first. Make sure it looks okay to everybody. That looks good. That looks good. There we go. Okay, let's get to it. Here is a express funded account. Looks like they've been in here since August 2nd, August 1st, beginning of August. And immediately what I see, upside down risk reward, high win and trade percentage. It's great. You've made $2,600 in this XFA. So great work on making money in a higher pressure account. Express funded accounts, obviously it comes with higher pressure when it comes to the mental side. When you do have an upside down risk reward, this is kind of what we see, right? You're really used to these higher win percentages, but then when you do have a losing day or losing trade, it eats up multiple of those days. And you could visually tell that this one bad day took out a big portion of these winning days. So it's always scary when I see something like this, because 2 of these in a row could really wreck an account. So, I like this. Your most traded symbol is micro NASDAQ. So I do love that you're trading this. Active day, here's the example, right? Most profitable day, least profitable day, minus 2,000. So your worst profitable day is double the size of your most profitable day. So that is something to consider. It looks like you're taking multiple contracts, right? Number of trades. I'm curious on what that is, whether you're scaling in or scaling out. 62 trades in 2 weeks is a lot. So maybe it's just you scaling in, scaling out. This stands out to me. 84 minutes. 84 minutes for your trade duration over about an hour and a half. That is interesting. Trading with micros. So I could get... I understand that. I understand where you're coming from. That's going to be interesting. Let's take a deeper dive. I'm actually more curious. Let's see. There's that one losing day. Yeah, that's what I was curious. What trade was this? It looks like you have 8 trades. And this is what I was kind of worried about when I see trades, like trading statistics like this. You're holding on to your losses for a very long time. 75%. So 3 of that can be scary. Where are you holding your trades and just waiting for them to come back? Like, is that what you're doing? Hopefully not. I mean, that's where you can see this upside down risk reward and this higher trade percentage. So yes, it's great that you're up money, but that can be scary. It's something that you should take into consideration, at least know, maybe understand, be aware of, so that way it doesn't catch you by surprise. And here's kind of what I was looking at and thinking. You can see how one day, one trade, it looks like one trade, one day. And this could be mentally hard. It really can. And I know it's happened to me. It happens to some of the best traders. And we have all go through something similar. It's great to see how profitable you have been, but one trade just wiped out 4 really good days, 5 really good days, right? And so all the time and effort that we're spending as traders, like you're spending money, you're spending time, you're spending mental capital, and you're spending all of this in front of the computer screen trading, And for all of your work and effort for 5 days to be wiped out by one bad trade, and it looks like you held it for very long, because $2,000 for 5 micros. Let's see, entry time 6 p.m., 4 hours, almost 4 hours. So that can be difficult. So anyway, outside of all that negativity, or that just red flags, right? You're still up $2,600 in an express funded account. That's beautiful, right? You should be proud of that regardless. But that can be something. Just pay attention to it. Work on that. I do love that you're trading micros for the most part. Looks like you're doing really well in crude oil when you are trading crude oil. But other than that, you're sticking to micros. So good job. Love to see it making money, even though there is a little bit of a red flag. Let's go ahead and move on to the next. Give me a second. Looking through here. Okay, here's another one. Going to try and get through a few of these tonight and then get to some of these questions. So here we go. Give me just a moment. And feel free to ask me questions as I go through this, guys. If you do have any questions, ask them. Just ask them and I'll try and get to it. So started this express funded account in June. Wow, look at this one. This is a unique one. I like this one because you've been in this account for a very long time. So since June, so lots of experience. Trade percent 63, average risk reward just above 1-to-1. Beautiful profit factor, right? So you could see every single one of these statistics that I've been reviewing for the past few weeks have the same thing in effect, where winning trade percentage is not by itself. Average win to loss is not by itself as well. When you have both of them, they don't have to be amazing. They do not have to be amazing. This doesn't need to be 70. It doesn't need to be 80%. Your risk reward doesn't need to be 2-to-1. It doesn't need to be 3-to-1. They just have to be good, decent, right? We're not looking to be the best of the best. We're just looking to be consistent and profitable. And both of these combined, both of them, above 50%, 63% is still really good. And just 1.15. So just getting a little bit better than a 1-to-1. And look at this, a 2 for your profit factor. And that has led to this. It looks like you had one really bad day, and I'm sure that's going to be it. And I'm just going to make a guess right now before we get into it. This is probably like the other trader statistics where one bad day just erased a whole month, right? Like that was one day just took out an entire month's worth of trading. That could be very difficult mentally. Same here, right? Another day that could have taken out an entire month. So yeah, it's going to be interesting to see as we continue to go through this. Yeah, look, Coach T, shout out to Coach T, says the same thing. Great job on maintaining a solid profit factor. So there we go. Total number of trades, 80. Total lots traded. So you're trading quite a bit of lots. It's still a very good looking equity curve. Like that's a very good equity curve. I like this. So I like this. That means you're mentally strong in terms of like you went through a drawdown, you was negative, and you grinded your way out of that over a longer period of time. Let's go through this. Cutting your losses short, not too bad. I really want to go through that really negative day. Where was it at? It was just $1,000, right? So let's go through this. So it looks like in your positive days, it's like $200, $300 on some of those, one $500 loss. But yeah, that is what I'm referring to. $1,000 losing day really sets you back, right? It just really one single bad day can do exactly the same as that last. And let's take a look. Micro, it's not a micro, it's a mini, just a mini, and it looks like 3 minis. Yeah, but overall not too bad, right? Positive money. And it sounds negative. I know I might sound negative, but another trader who is profitable, who has made money, and a trader who's been in an express funded account since June. So I love to see it staying in those express funded accounts, not blowing it. Trading small, working on it, working on your strategy, working on trading, and also trading through multiple different trading environments, right? So overall, great looking statistics on this one as well. Let's go through maybe one or two more. I'm trying not to look at combines. Okay, guys, I have a lot of submissions, and I'm just going to come through here and take a look at express funded accounts first, and then maybe if I have time, look at some XFAs. And now for express funded accounts, more than just 3 or 4 days, please. Okay, I'm going to look at this one because I do see something that I can make a comment on already. So you just got your express funded account just not too long ago. Looks like you only have 5 days. So barely got your express funded account. You're hanging on to breaking even. Like I said, not a lot of statistics. A lot can change. Any single day could change that. You're hovering around to break even. Just got it. You're up $800, so that's good. 472 trades. Okay, so let's take I want to dive into this, and this is why I'm reviewing this trader statistics. 5 days, 500 trades, or 500 lots traded. That is a lot. I'm guessing you're trading a lot of contracts in micros. Best trade is 1 mini on the NASDAQ. Worst trade is 2 minis in the ES. There's the bell curve. It's kind of mixed. It looks like some of your bigger losses you're holding your losses a little bit longer. I do like your journaling. Look, you're journaling, so that is a positive thing. You're not just blowing your account on one trade, are you? Yeah, it's not bad, right? These are, I spoke a little bit too soon. Looks like you lost the majority of this day on one entry in minis, the mini ES. But yeah, this is the example, right? So far, you just got the account. You traded tonight, right? So you're traded tonight. You're up money tonight. So big shout out to you. You're up money tonight. You already have 86 trades tonight since we've opened up the markets. 45 or 47, 90, 130, 118. There's a lot of trades. So probably scaling in and scaling out, I'm assuming. I like that you're journaling. That's a positive note. You're still up for the week. Lots and lots of entries using micros. So I don't know. Usually, and I know Mick mentioned this the other day where there was a trader who traded an outrageous amount of contracts. There's not really a good rule of thumb to determine, how many trades should I be placing, how many micros, right? I know there's a conversation to be had to say, I love trading micros. Micros are great because they could help manage risk. But the real question is, at what point do you switch, right? Like, when should I switch from micros to minis? Maybe this could be a point where you could consider yourself switching from micros to minis. Essentially, you've traded 47 minis, 51 minis, you've traded 51 minis, right, this week. I don't know. I'm going to be completely honest, is maybe that could be a good conversation. Maybe I message Mick. You know what? I'm going to do that right now. So this is a good reminder. Where's Mick? I am messaging Mick and the risk team because I am genuinely curious. Hey, in the middle of class, when would be a good rule? And I'm gonna start this conversation because I'm being serious. I am too really interested, right? Because I'm used to trading minis now. And there is something to that. Like, when should a trader switch from trading micros to minis, right? Is there a certain threshold, a certain size? Micros stack up a lot of commissions, as you could imagine. Like, you see a lot of these little fees that add up when you're trading micros. But where's the point? And as a coach, I think that is a discussion that I want to have with the team, because I am genuinely curious. And if I am going to be teaching everybody and I want to help guide traders in the correct direction, I think that's a fair and a good discussion that I could do my own homework, and then I could also report back to everybody in class and give my own opinion, right? Because that's all it is at the end of the day. It's a good opinion, and everybody is free to do as you want. There should be a good guideline, because we have a lot of new traders, and maybe that's the same thing, because I talk a lot, trade micros, and then traders are trading micros, but then at what point should you switch to trading minis? So I have a note. I made the note. I'm not messaging him now because it's night, right? But I made the note to message in the morning, and maybe I could have a fun phone call, because this is definitely something that I'm not saying that's bad right now. I don't know if it's bad or good, right? Like, at what point would this become more beneficial for the trader to switch to minis? Like, is this beneficial now to switch to minis? I don't know. Should you wait? And, if it's over 100 lots, should you switch? I don't know. Should we call him right now? No, I'm going to do that. Let's get Mick on the phone right now, live during class, in the middle of the night. No. He needs sleep. He has a lot. Topstep team, they have a lot that they're doing every single day. I love them and appreciate them. So tomorrow, maybe next week, I'll be able to have a good answer tomorrow. Maybe I could even bring him up. Yeah, so that's a fun question. He's going to be on for, is it going to be, I'll have to double check. Shoulder tap tomorrow. Maybe I'll join Shoulder Tap in the YouTube chat and ask that question. I think that's a good question. And it's going to be the conversation to start. So, yeah, I'm now curious. I'm going to have to do some research on that tonight and talk to some of my trading buddies on what would be the most optimal way to do it. Because now I'm really curious about this. Because, yeah, I can't give any suggestion. I can't do a good recommendation. I can't do a good job as a coach until I do my own research, because, this trader's profitable, and I'm not going to say anything. You made $800 this week. Sure, it's a little scary, but I preach using micros. Micros are a good thing. Snow in the chat, you say, micro MES on a 10 lot has a fee of $7.20 and a mini is $3.76, so almost double. Yeah, so that's the thing. The key is about fees, and there's a lot to it, and there's a lot that I feel like newer traders and even traders who's been here for a while should understand, especially when you're trying to trade micros and transition from micros to minis. And when should a trader make that transition, right? Because you want to scale up, and that's ultimately the goal, is you want to continue to scale up. If you're profitable and keep being profitable, and you want to keep scaling up and trade bigger, at what point do you just add a mini and not micros, right? Because once you switch to minis, you can't do just like, okay, I'm going to trade 5 minis and 1 micro, or 1 mini and 5 micros. You don't really, like, you can't just like put a couple in a basket, right? You can't say, okay, I'm going to take 1 mini and 6 micros, 1 mini and 8 micros, right? You really, when you're day trading, you either choose, okay, I'm going to be trading 1 or 2 minis, or I'm going to be trading like 10 or 20 micros. So it's going to be an interesting conversation. I am now excited to have that, because it's going to be very important as well for myself. And I'm sure you guys are probably curious. Maybe you guys might even know more about that than I do. I guarantee you there's some traders in the chat who know a lot more than I do when it comes to the micros versus minis. But all right, I think that's enough. I am going to be ending it there. In terms of the statistics, I think that's enough. We reviewed some of them, and I think this is a good conversation to end it. Now, remember, I haven't finished. I have not traded with those hotkeys yet because I'm still trying to figure out some of this stuff. However, have you guys, let me know in the chat, have you guys used the hotkeys? Let me know if you've used the hotkeys. I'm curious. Let's pull this up. I'm going to pull this up now. Let's get this up. Let's take a look. So in these settings, under these hotkeys, I did notice there is now a contract size +1 and a contract size -1. So that is new. I do like that, to be able to adjust your contract size. Not yet, not comfortable with my setups yet. Fair enough. Like I said, practice account, practice account, practice account. Always be using a practice account until you are comfortable using that tool. You use it every day? Oh, I've got a lot of amazing feedback from traders saying how much they've loved these hotkeys. Now, I'm not a hotkey person, but it doesn't mean I won't try them out. I'm up to try a lot of things out in terms of, like, can it improve my trading? Will it do this? Like, these different things in my trading I really want to do. Like I said, just like everybody here in YouTube and everybody, I want to improve just like everybody else. I tune in to other traders, right? I tune into Nick for a Tick's new session on Sunday. I've been tuning into Coach Jay's session because I love to hear their perspective on these markets, because I am learning. I tune into my trading buddy Rips in the mornings. And if hotkeys was designed for anybody, man, Rips is the hotkey master when it comes to trading momentum, getting in and getting out. So yeah, I'm always learning. You guys are always going to see me in the YouTube chat watching everyone else's classes. Nick for a Tick, I like D. She's at 3:30 a.m. Watching recordings is also a good thing. And then, of course, whenever we have an opportunity to watch a Brett Steenbarger is great. So I'm definitely excited for, when was it? August 20th, when Brett's going to be on TopstepTV. So until then, guys, I'm going to look forward to having a conversation with Mick in regarding to that. And then I will see everybody here either Sunday night or bright and early tomorrow morning. Take care.